Hello everybody, JJ here. It is Bull Boom Bear Bust. I'm back here. This is Monday, March 2nd. So bulls and bears, we have a lot of news to cover. A lot has unfolded in the last 24 hours. Yes, I did put out a video this morning, but this economy and the stock market volatility and all of the things that we need to talk about are becoming fast and furious. So let's go ahead and get into it. First of all, real quick, thank you to all the subscribers here. We are closing in on 39,000 subscribers. Much better than I ever thought I would do. Thank you all for your support, for being here, for your subscriptions, for your likes, for your comments, and all the support you give me, especially the Patreons and people that send donations through PayPal. Thank you all very, very much. Let's get into it. So what some had thought would be Black Monday did not happen. The Dow Jones fired back bigly today with about a 1,200 point rise. In addition to that, we're going to discuss today, can the Fed save the economy? Is the big scare finished? The unthinkable is on the way. That's being reported. We're going to tell you who reported that and why they're saying that. Costco jumps on panic buying. Is that going to be good for the economy? All of these empty shelves and panic buying. So let's get into it. And let's start with the major indexes here. The Dow Jones up nearly 1,300. That was about a 5% jump. NASDAQ 4.5% approximately. The same thing with the S&P 500. Gold up a few dollars, still right around that 1,600 mark. Oil did catch a bid today, so we're seeing a jump of over $1. That was good for a 2.6% increase. The yields on treasuries continue to be beat down to historic lows, which typically is a big recession indicator, but we've seen these inverted yield curves kind of jumping back and forth for the past year and a half, 2 years now. Now, the big rebound today in the market, we know that the market makers, the fiat bankers with unlimited currency at their fingertips, they can move the stock market any direction they want to. And some people ask, well, why did they allow this big panic sell-off then? If they want to keep the economy looking as good as possible, why would they have that huge down week that we had last week with thousands of points being wiped off the Dow Jones and all of the other major indexes? Well, think about it. The stock market is not the economy. It's a big part of the economy, and it's a big part of keeping consumers confident, but it's not the economy. So what we're saying here, no matter how high they pump up the stock market, once we start seeing other factors that are out of the Fed's control, like empty store shelves, panic buying, rising prices because of shortage of goods, companies that are afraid to hire because of the scare that's spreading across the globe right now, right? So many things out there are pushing a negative sentiment that the Fed, they have to be really careful. They don't want to have the stock market flying high when everything else is falling apart. And this gives them the perfect excuse for more stimulus and more rate cuts. Right, so we're going to talk about what we left off a few videos ago. This is the perfect excuse. I'm not saying anyone did this on purpose, but this the scare that's spreading across the globe. Now they can use this to point the finger at something else instead of admitting that this stock market and this economy is a big, fat, ugly bubble, which actually someone did admit a few years ago before he stepped in the big chair. But we told you this was going to be used to push for lower rates, more rate cuts, more stimulus, and of course, more deregulation is going to follow. And sure enough, right on time, he was out there today knocking the Fed for not cutting rates, saying that the Fed needs to go lower and negative on the rates, comparing to countries like Germany and other countries that are also pumping massive stimulus as well as lower and lower rates. Right? And this is the game plan, and this is actually the entire playbook of the market makers, the fiat currency bankers. That's all they have, is push more funny money into the system, lower rates. That way the debt can be carried over more easily, it can be rolled over, and in general can be more easily sustained. The fact that these measures have to be taken doesn't mean the economy is good. Well, no, just the opposite. It means the economy is in big trouble, but they can't have the masses awake to what's really happening. So now they have the perfect excuse to push for lower rates. And it did not take too long for lower rates to be put back into the spotlight here. Now, another CNBC article here. Unthinkable a few weeks ago, Wall Street sees a chance of rates falling as low as 0 this year. Now, Unthinkable, really? I think I know a channel that's been talking about they're going to need lower and lower rates to keep this Ponzi scheme, big fat ugly bubble economy from imploding. And I think that channel has a forward name and all the letters of the name start with B. But to be fair, there were other channels out there, other alternative economists that were saying the exact same thing. They're going to need to keep cutting rates, but not so many mainstream economists, people on the mainstream news and the quote-unquote experts on the mainstream financial channels. I wonder why they didn't say this. At least not many of them. Now, J.P. Morgan Chase economists see the Fed acting even more aggressively than the market is anticipating. Current market pricing is for a 50-point cut in March and a 100 basis point cut total this year. Now remember, the rate cuts that we did see previously were 0.25%. So this would be a big jump up in the aggressiveness of the central bank in the Fed's decisions. Also, JP Morgan says the Fed could go to 0 by the end of summer if conditions persist. So there you have it. Things are moving just exactly what we talked about. They're going to use this scare as an excuse to go lower and lower on the rates. That way the fingers are not pointed at their policies. They have the perfect excuse. Let's take a look at the repo bailout action that took place today on March 2nd, which is Monday. We're going to scroll down here and we do see another $53 billion pumped into the system. That was liquidity. Now here's what I anticipate going forward. I anticipate the market makers to try to balance the stock market just enough to keep the consumer confident. We don't want to see any major, I should say they don't want to see any major collapses in the stock market because that could bleed over into the real economy. And when you see panic and fear take over because of something like a plunging stock market, the rest of the economy can very easily come down with it. So when I say a balance, they're likely going to push it up enough to keep people happy with their 401k balances and their paper wealth. For the wealth effect, that way consumers, they're still going to go out and spend. They're not going to be pulling back on spending, which could really cause chaos in the economy and job losses. Because remember, about 70% of the U.S. economy and the GDP is consumer spending. Right. Also, I expect the market makers to use the uncertainty of the upcoming elections as another excuse why stocks are not even higher. So they're going to push it higher, in my opinion, but we're also going to see scares, sell-offs, and volatility. Remember, nothing goes up and down in a straight line, and expect them to leverage the movement in the markets for their agenda. Now, some people say, hey, JJ, no, they can't just throw unlimited amounts of money at this economy, at the markets. You know, they're not allowed to do that. Well, really? Really? I've been seeing people talking about that, but I've never read anywhere that there's any limits on what they can do. And in fact, there's not even any audit that we can do. A guy named Ron Paul tried that back in 2008, and it's been attempted since then, but there's no audits that have been done. So anyone that says that, they are lying to you, or they are wrong, or they have their facts mixed up. There's no limits to what the market makers can do in this case. Now, Investopedia, they lay it out pretty well here in the modern monetary theory. It is a framework that says monetarily sovereign countries like the US and the UK, Japan, and Canada are not operationally constrained by revenues when it comes to federal government spending. In other words, such governments do not need taxes or borrowing for spending since they can print as much as they need and are the monopoly issuers of the currency. That's exactly right. Key line right here. They can print as much as they need. And guess what? You think everything that's put out there that they're telling us about is all that's happening behind the scenes? Do you really think that they're that upfront and above board with us? Right? So let's not be silly here. We know there's a lot more going on behind the scenes than meets the eye. And again, the market makers, they have unlimited funds at their disposal. It's not backed by anything. It's a fiat currency. That's why I call them the market maker fiat bankers behind this system right now. So is the big scare finished? I don't think so. They're still going to use this panic that's spreading across the globe for their agenda, in my opinion. Let's talk about Costco. This is going to piggyback a little bit off of our last video that we put out this morning. There are several Costco's that are seeing empty shelves on certain items like TP, hand sanitizer, bottled water, and a few other things. We outlined it here in this video. But what about all the consumer spending that is happening right now with all this panic buying? And we're talking about people waiting around the building at Costco just to get in and buy these items. Well, consumer spending, it's a big part of the economy. And if we look at Costco stock today, we see a big jump of nearly 10%, up $28 now to $309. And I don't expect this panic buying to continue. But of course, I don't think anyone can predict exactly how this whole fear that's spreading right now is going to end, or will it end. Maybe as we get into summer, we'll have to wait and see. But we see nearly a 10% gain, about double that the overall Dow Jones went up today. And a couple other things happening that are not so good. We had more brokerage outages today. Actually, my trading account was inaccessible today for most of the day, and that was with Robinhood. And you might know that Robinhood was one of the first brokers to have commission-free trades. Well, it looks like you get what you pay for. Now, to be fair, there were other brokerages with outages here in the past couple weeks, but a lot of those were handled and corrected pretty quickly. Robinhood, again, down all day. I could not get into it. And I tweeted out the following earlier today. Was able to log into the Robinhood app, a mobile app, and see my positions, but cannot make any trades. Also cannot log into the desktop app. And I did tag Robinhood, and luckily I got a reply, just a canned response. Our apologies for this. We're committed to resolving this issue as soon as possible. We'll share more updates when we can. We appreciate your patience. Now, this is the kind of thing that has a lot of people just wanting to get their money out of the system. So this is just brokers right now. Of course, Robinhood, they're a big, widely used broker, not the biggest broker by far. But can you imagine if these types of issues start to affect the broader financial system, right? Can you imagine having your life savings tied up in some digital screen somewhere, and the corporation behind it just says, sorry, we're working on it. All your money's gone in the meantime, right? So let's use this writing on the wall, this canary in the coal mine, as a motivator to prepare for what might be coming. Now, I expect more insanity to unfold throughout this year in 2020. There's a lot of things happening, again, behind the scenes that we're not being told about. I think a lot of things are being covered up right now for many reasons, and it's so well hidden right now and behind the scenes that if I even talk about it, people will start asking me for sources. So this is just my opinion, but be ready and be careful in 2020. Believe me, some more quote-unquote events are going to be unfolding, and it's going to be unbelievable, and not the unthinkable about what CNBC called the unthinkable with the lowering of the interest rates, but there's going to be unthinkable things happening in this, not just the economy, but in this world. All right, everybody, so hope you're safe. Be careful out there. I'd like to hear from you down in the comments. What are your thoughts on this rebound today in stocks? Is it going to continue? Do they want to push it to new all-time highs with their unlimited bottomless ocean of currency that they can throw at this thing? Also, is the panic buying done? Are we going to see more shortages? I think the combination of the panic and the freezing up and troubles of the supply chain could lead to more panic here very soon. And again, another reason why they need to cut rates. They need to try to lower taxes, deregulate to try to get the banks to loan more, to get people to take on more debt. And that way this debt illusion can keep going at least until the end of the year. But we'll have to see. Thanks everybody for watching. Ride the bull, prepare for the bear. Bye for now.